Hello again, this is Michael Arias, and this is the extended for the 2022 wrap up video. So, there's just something I really needed to go back and talk about in relation to the US dollar and cryptos, because I know cryptos is a very popular thing right now, of course. I mean, you can make some mad gains, right? That's what it's all about, isn't it? But you got to take a look at it from this perspective, right? And this is the part that really is troubling me when it comes to, why are we in a downtrend in cryptos, but yet the US dollar's falling? And I want to highlight three things. The first one is, well, 2017, we had a move lower and it was a pretty, good move down. And we saw the biggest gains in altcoins, especially that we've ever seen. Come 2020, we had another move down, but yet, take XLM for example. You didn't see as big a move up as you did in 2017, right? You just didn't see it. So even if we did have such a move down in US dollar like what I'm expecting, do you think that's going to make much of a difference right now, right? And that right there I think is the key point. So that's one. But then you've got interest rates going higher, right? During this time, especially at this point, right? Not so much before that, but at this point in 2020 is when the TNX ticker symbol 10-year bond yield started to rise. But yet you've got weakness in cryptos. So that interest rate rise is having an effect on people, using extra cash or being able to obtain extra cash or even home equity or credit at their disposal, even disposable income, as a way of purchasing these types of assets. So, therefore, the US dollar going down, it doesn't really mean that it's US dollar down, crypto's up. No, there's a macro fundamental backdrop to this, which is the thing that I've been learning since, a couple of years ago. And it's definitely piqued my interest because I knew that there was something behind the scenes. I mean, I've always looked at every chart, definitely, 100%. But then I started to piece the puzzle pieces together, and I started to realize that there's a lot of mechanical stuff going in the background. George Gammon, amazing content. I really do like his content because it really paints out the bigger picture. And one of the most recent videos is like, well, why doesn't the banks just buy everything? And they can't. There's a reason for that, and it's good to know because it's true. Like I've heard this argument so many times. Why don't they just buy everything, make everything better? They can't make everything better. That's the whole point, right? If they could make everything better, the markets wouldn't be free to discover the prices they discover because the markets discover the prices based on people, right? People are the drivers of the economy. People are the drivers, regardless of what they're doing in the background. The people, if they didn't have people, then whatever they're doing is doesn't mean anything anyway, right? So people do have a major impact on this. So what I can see now, so that's two. Three is, well, basically because of what's happening is, and I'm doing it in three steps like George. Oh my God, what's going on? Um, yeah, look, if US dollar goes up, interest rates go up, well, of course it's going to cause a crash in cryptos. And the US dollar is just a gauge as to, you know, lower. Look, US price could go down lower than it has before, or as low from higher, and and cryptos won't even care. Like they'll just continue to crash because of the interest rates. So going forward, like this is going to mean that the bear market won't end yet until more than likely we get a really big crash till the end of the third wave, right? Wherever it goes. Like I'm not trying to, where I'm putting this right now, can you see 202 over here? Yeah, that's great. I don't mean it to be there. It's just for illustration purposes, educational purposes. I'm not a financial advisor, all that stuff, right? It's the point I'm trying to make. Do you understand the point I'm trying to make? Right? Because if you go back, I point out waves all the time. Yeah, I point them out. They do work. They're amazing, right? It's scary how amazing they are. And that's why it's really troubling for me to actually put this out there to show you that US dollar goes down, and every time it goes down after 2017 crypto rally, every time US dollar goes down, the markets are carrying less and less. Some cryptos haven't even been around in 2017 rally, so you can't see how crazy it could have looked, I suppose. But now that you have seen it, you might think, oh, Cardano will rally it will explode during this US dollar down. Except, really, will it? Will it? And that's the thing that I'm trying to say. US dollar no longer has any power over crypto, like in terms of it going down, right? Cryptos are getting obliterated against US dollar. Absolutely. But the point I'm trying to make is if US dollar goes down, it's not going to have the same effect it used to have. That's the point. And given the current environment with interest rates going up and up and up, it's only just getting started, right? So my Bitcoin view, my really bearish Bitcoin view is bad, somewhat bad. It's not 10,000 low, it might be lower. But XLM is much lower. I've already put that out and shown you in the last video and previous updates. Now, whether you want to believe that or not, especially because Aussie dollar's going higher, apparently. I mean, looks like it. I mean, it's just not the same picture as you just can't use it as a gauge anymore. I thought maybe you could, but I was wrong. Well, I think I'm wrong. Right? I used to think that if currency goes up, well, crypto is going to rocket to the moon. Wow. But just that alone is kind of scary because that's not even based on the waves. That's based on an assumption that we're going to see cryptos go up because fiat currencies went up. That's an assumption. And it would be a disservice to you to say that that's going to happen. And I have said it before, but I am not saying it now. And my 2022 wrap up suggests that US dollar down isn't going to impact cryptos in terms of it moving higher. In fact, I think the stock market also doesn't care about US dollar going lower. I think that the stock market in cryptos cares too much about interest rates going higher. Even if they correct, even if interest rates correct or the bond yield's correct, just because the bond yield's correct doesn't mean interest rates will go down, right? Let's be real. It doesn't mean that. Um, I don't know what it means. It could mean that they just don't do it as aggressively as they may have. It just means that you know, long term, the market's sort of pricing in any US dollar declines because it doesn't care. Because it's almost like it's trying to price in a correction of interest rates because it knows that higher interest rates are coming. Now, if there was any time that that would happen, I think that would be now, right? A move down lower in interest rates, it's probably not going to happen. And I think that's priced in, and the bond yields understand it, the US dollar understands it, cryptos understand it, stock market understands it. Do you understand it? Well, I am not saying I'm right. I'm speaking about probabilities here, not certainties. And I really do think that nothing is what it seems. So if you've made it this far, amazing. If you want to learn the waves, you know what to do. But yeah, that's it for me. Hope you have a happy new year.